Three letters have guided investors to profits in recent months. And hey, I know what you're thinking. AI is just two letters. Well, guess what? I'm not talking about AI and our glorious robot overlords. What I'm talking about is BTD and what it might mean for that three-letter asset everybody loves, BTC. Hi, I'm Matthew Carr, Tactical Trend Strategist at Money Map Press. Thank you for watching this episode of The Trend is Your Friend. If you're new here, be sure to hit the subscribe button and turn on notifications so you never miss out on the best trading ideas, which we share here each and every week. All right, so BTD, buy the dip. It's been the rallying call for bulls since 2022, even going back all the way to 2020. And for myself, I've used it plenty of times. For example, let's jump in our Wayback Machine and see that just a couple of months ago, at the end of February, when everyone was freaking out about the Fed and regional banks and the markets were selling off, well, I told a group of my subscribers to look at the March 2024 leaps on the QQQ and the SPY to take advantage of the pullback to BTD and keep our eyes on the prize. Go ahead and fast forward to today, and those March 15th, 2024 $290 QQQ calls have already more than doubled, right, in just a couple of months. So buy the dip has been a pretty effective strategy, not only in February and March 2023, but also in December and October 2022, and even going back to October and March 2020. Well, today, let's explore the idea of BTD with BTC, Bitcoin, the world's largest cryptocurrency. So I'm most known for being a tactical trend trader. I exploit seasonality, uneven earnings with my Vert EA strategy, and then I cover emerging trends like AI, cannabis, cryptocurrencies, autonomous driving, all that kind of stuff. Now, what most investors never realize is how often repeating patterns play into the vast majority of sectors, right? That they all have seasonality. And there's fundamental reasons for seasonality, for that ebb and flow of consumer and corporate dollars. Now, some of you, when we start talking about cryptocurrencies, you already understand that cryptos, particularly Bitcoin, move in a 4-year cycle, right? That has to do with reward halving. And I actually have a whole report on this concept that's going to be available to new subscribers. So keep an eye out for that. But what you may not recognize is that Bitcoin also has these monthly cycles each year. There are months when the price of Bitcoin consistently tanks, and that makes great buying opportunities, as well as months where it soars. Well, what's fascinating right now in the space is for Bitcoin, we have the 4-year cycle momentum starting to build, right? Our next reward halving is in 2024, and that sparks this massive surge in price. But at the same time, there's this other force at play. We have crypto seasonality coming in. And let me show you what I mean by that really quickly here. Okay? So Bitcoin rocketed higher back in March, and it continued to push upwards in April. But the wheels really started to come off in May, and it's been this kind of grind lower with Bitcoin losing 6.87% in the month, right? So we've already gone from above 30,000, which everyone was celebrating, to below 27,000, and right now we're trading right around that $27,000 level. But here's the deal, and what most people kind of don't realize. That's the third consecutive year Bitcoin has fallen in May. And it's also the 4th year of losses in the month over the last 6 years. So that means some of you may, no pun intended, are starting to think about accumulating more now to BTD on BTC. But I want you to hit pause on that and just kind of pay attention to what I'm going to lay out in my next couple of charts here. Because up ahead, we have June, all right? June is a difficult month for Bitcoin. We've seen that the cryptocurrency has fallen in the month in 4 of the last 5 years. It's been a pretty difficult one. 2022 was a very difficult month for Bitcoin. July is a good month. Then that's followed by August. And then we get into September. And September is just a nightmare, right? Since 2015, September has been by far the worst month for Bitcoin. It's fallen in the month for 6 consecutive years, every year since 2017. All right. That means that over the next few months, we have this difficult stretch for Bitcoin, right? We have June, we have August, we have September, which is the worst month of the year for the cryptocurrency. And then we have November, which has been a very difficult month and for the last 5 years. But look at this chart, because sandwich in between all that negativity, we have July and October. These are two of the best months of the year historically for Bitcoin, where the crypto has averaged a gain of 15% in each of those months over the last 5 years. So we definitely want to BTD on BTC in preparation for that massive rally we should see in 2024 that stretches all the way into 2025 because of the reward halving. But we don't want to get an itchy trigger finger. We don't want to jump the gun too soon. We want to be patient. We want to be efficient. So look for a pullback in June. You can start nibbling again there like you did earlier in the year. Then you can look to start adding again in September, maybe even more in November and December, because we know what's coming. We know that after that, Bitcoin should be off to the races in 2024. And on top of that, that first half of the year is traditionally very strong for Bitcoin. In fact, the cryptocurrency has only ended the month of February lower once since 2015. All of that is wind in our sails as we head into the reward halving in April of 2024. Let me take this end again. All of that is wind in our sails as we head into the reward halving in April of 2024. So yes, we definitely want to buy the dip on Bitcoin, but we want to be patient. We want to be patient on BTT, on BTC. Okay. Well, thank you guys for watching. I'm Matthew Carr, Tactical Trend Strategist for Money Map Press. And thank you for tuning in for this episode of The Trend is Your Friend. If you like the information and you want to have more information like this, be sure to check out the link in the description below to sign up for our free e-letter. Until next time.